What's going on, guys? Lottery Stocks here. Today we have another GameStop video. This is actually some DD on Reddit posted by C-Diggs, and we want to get straight into it. Why we're still trading sideways and why we have not launched yet. Why is the rocket not taking off? We have everything set in place that we need, but actually not quite yet. We're trading sideways and we're getting ready to ignite this huge rocket ship to blow all the way past the moon. Diamond apes, diamond hands. Let's go, baby. Let's get right into this DD. Through an exciting weekend of suspense only to end up with yet another day of sideways trading. I'd like to examine why I think we have not yet launched based on the bits and pieces that we know. In this post, I'll be rehashing. Alright, guys, take this with a grain of salt. He's not a financial advisor. His first theory, let's get into it. People actually are thinking GameStop is a black hole. Let's see what he has to say. The GME, mother of all shorts, is like a black hole in more ways than one. We can only speculate on what is happening based on how the different entities in the system are interacting. Let's revisit my earlier post with some new data points. Who are entities circling this black hole? So we have this right here, guys. I'm going to chop this up and put it on the screen. While this is alleged at the moment, what is clear is that some law firms believe that this case against multiple entities, including the DTC, for conspiring to shut down the January 28th squeeze, set aside the idea that Citadel or GME shorts alone can suppress the price of GameStop. If that were the case, we would not have even had the January and February spikes in the first place, since Citadel and the shorts alone could have stopped it. As I mentioned in my previous post, rather than thinking of the situation as Citadel is shorting the market or it is a battle between short HF and long whales, to DTC, OTC, SEC, and the shorts are preparing for the squeeze. Literally every major entity in the global banking is entangled in this through the DTCC. Even the non-DTCC members are entangled as they use DTC members for clearing their trades. How they are preparing. The fallout from this squeeze is that there are multiple DTCC members who are going to fail and default. When this happens, the DTCC or corresponding subsidiary will step in to manage the default through recovery and wind down procedures, which are documented in their member agreements. During the squeeze, the DTCC will intervene and provide immediate liquidity when a member defaults. In turn, DTCC will use the assets of the defaulting members as collateral for that liquidity. Those assets from the defaulting member will then be auctioned off to recover those loans. Let's talk about why this is interesting. There are generally three views on what is about to happen. The entire system and the banks are going to belly up because of the scenario described in the Everything Short DD, which I'm pretty sure I went over that, guys. Go check that out. So these additional billions are to buffer from the collapse. The banks are reacting to increased liquidity requirements stemming from last year and the expiration of the SLR. A few entities are probably going to collapse due to overexposed positions, and other entities are moving into position to profit from the collapse. So let me read that again, guys. A few entities are probably going to collapse due to overexposed positions, hedge funds, and other entities are moving into position to profit from that collapse. My sense is that number one, it is a bit too extreme. Having gone through 2001 and 2008, I have learned one lesson. The rich will not allow themselves and the system that props them up to fail because they are dependent on the system to support their bottom lines and lifestyles. So bottom line, the rich are supported by the system and that is their fallback. What alternative do they have? The yuan, the euro, the GBP, the yen, the ruble, the crypto. What are you going to do with that Doge or Bitcoin if you can't convert it into actual currency? How are you going to be able to buy your lattes from Starbucks with Doge? There is no alternative. That said, we are at nexus of multiple blows potentially impacting these financial institutions, and GME is just one possible primer that sets off the chain reaction. I think it is most likely a combination of 2 and 3, but what if 1, you are a non-defaulting member, 2, you know that there are going to be member defaults, 3, and you know that there will be auction for their assets at a market discount. How would you prepare for this? Perhaps you'd have cash on hand to meet liquidity requirements and emerge from any collapse flush with assets. How might you be able to do this? Alright, guys, if you want to go, I'm not going to click all these links and go over all these links. I want to get through his DD right now. What is important to understand the difference between short interest and short volume? Whenever a market maker fills an investor's buy order, the is facilitating the trade by shorting shares. The short volume is actually representative of investor buying volume. The purpose of a market maker is to provide liquidity. So say you want to buy a bunch of IXG rather than waiting precisely for a seller of the exact same block size to enter a sell order that mirrors your buy order. They create the short, an IOU, and hand you the shares and then close the IOU when they can round up the shares. Thus, this increases the short volume, indicates demand for IXG, which the market maker is fulfilling using a short, which they will balance by buying shares. So yeah, guys, just a short. You borrow, you got to buy back to give back to the broker, and if you can't give back to the broker, then that creates a failure to deliver. That is a default. If someone defaults, they're pretty much saying, this guy's pretty much saying, if a rule that comes into place, we're going to get to that. If a rule that comes into place that says, and that gets passed, that says that one default is going to have to cover everything up, this rule will not be passed until the firewalls are put up. So pretty much before in the DD, when it was saying how the rich rely on the systems as their fallback, right now the systems know they're screwed, and their fallback is actually just preparing to throw them under the bus. The SEC and the DTCC are actually just preparing to protect themselves, to put the firewalls up and prepare for what is about to happen. They know the hedge funds are screwed, and we just need this rule to pass. We need them to be ready, and we're pretty much just sideways trading, waiting on them, preparing on this new rule to come out, and that's why we are sideways trading. How do they know there will be a default and who will default? How can we approach which of these two scenarios above is more likely? No one can say with certainty what will happen except for a few very privileged insiders. Everything I've hypothesized can get blown away tomorrow, but we can consider some of the evidence that we can observe and see where it leads us. Tucked into DTC 004 is an interesting bit of text, page 12. In light of observations from simulation of participant defaults, multi-member closeout simulation exercise. They have an existing model that they can use to simulate market conditions, and it is possible that they have already simulated the squeeze and the aftermath. My assumption is that they also have some idea of the probabilities of which of their member entities are going to fall, when they will fall, how they will fall, and how much liquidity they need to contain these defaults. Corridor indicators include, for example, the effectiveness and speed of the DTC's effort to liquidate collateral securities, impediment of the availability of DTC's resources to pay any borrowings due to any participant default. The key indicator called out as an example is how quickly DTC can liquidate the defaulting members' collateral assets. We don't know who will default, but I think the DTCC members have an idea. DTC 004 was filed on 2021 March 29th and effective immediately. They have long been planning for the defaults that will occur as a result of the squeeze. Of course, models can be wrong. I have read Michaels Lewis panicked that the financial models involved in 2008 collapse didn't account for the fact that the real estate value could go down and the effect of the downturn on overlong leverage positions. What does this have to do with trading sideways? 2 weeks ago I posted, why are we trading sideways? Why is the borrow rate so low? When will we moon? What you can take away from this is that we will not see significant price movement up or down for the foreseeable future until OCC 004 and OCC 003 are in place. You are literally fighting against all of Wall Street, even the GME long institutions. There are literally no point in buying deep out of the money options until there is a whiff of OCC 004 and OCC 003 getting close to implementation. We will keep trading sideways. Borrow rate will be inexplicably low. Volume will be absent, etc. until DTC and OCC members are protected and they let off the brakes. Citadel and GME shorts have not been in control. DTC, OCC, and all non-defaulting members have been preparing for the default of GME shorts. Since that time, we've had the drop to 140 and then more or less back into a stasis point. Millions in options will have expired out of the money. I had pointed out the timing and coordination for the two prior drops, and now we have a third set of data points to consider. The dip to 120 coordinated with the Q4 earnings, an almost immediate return to stasis. The dip of 160 coordinated with the positive Q1 preliminary result as an almost immediate return to stasis, and now the slow dip to 140 possibly coordinated with number 1 Melvin's Q1 results, 2 Sherman being denied his shares and being replaced, or 3 the early discharge of the long-term debt, and 4 DFV's options being exercised. Now it appears we've been sitting in a new Lagrange point trading sideways again. As I've stated before, I think that the variety of tools we see at play are all part of the arsenal being deployed by multiple parties coordinating to keep the strap down until the non-defaulting members are firewalled. The deep in the money calls, the dark pool trades, all of it's plainly visible to DTCC and the SEC, yet no action is being taken. What about the share recall or insert catalyst? My conjecture has always been that we will be waiting for the OCC 003 and the OCC 004 as long as possible, because there are 2 codified key changes: the OCC member agreement to contain the fallout of the defaulting members. In particular, OCC 004 has very curious proposed change on page 5, which basically blows the auction process wide open and allows a much broader array of bidders to the auction. Remember, Fidelity and BlackRock are not members of the OCC, but now they get a streamlined path to the auction. I think that in an ideal world, BR and Cohen want to wait until OCC 004 is confided to launch, and in fact perhaps thought that everything could have been finalized now and they would be able to ignite this launch squeeze. SIG threw a wrench into this by objecting the OCC 003, thereby pushing out his finalization, which would have been April 10th, setting us up potentially for this week. If 004 had also been finalized, but now could go out to May 31st, we are now running into the issue of the calendar and the shareholder meeting, since some number of shares will likely have to be recalled in the next few days. This is BlackRock talking about GME, what happened on March 16th and why we have been trading sideways since. DTC 003, the key change is that DTC participants were required to reconcile and confirm their records of their positions with the DTC's records of their positions on a monthly basis prior to DTC 003. After DTC 003, the participants have to reconcile and confirm their positions on a daily basis. And we have seen then largely been in the sideways zone for a few days of movement since. So the January 28th event may have been caused by Citadel starting the process of reconciling their positions to submit and confirm with the DTC. After January 28th, all parties had a sense of the magnitude of this event, but probably could not get enough transparency to make the right decisions. Why wouldn't Citadel just continue to fudge their books? There's something interesting on page 12 and 13 of the DTC 003, which gets referenced again in the DTC 004, which is filed 13 days later. Here you go, guys. Putting the pictures up for you on the screen. Too long didn't read, so what ape do? Same as always, hodl. My conjecture is that in an ideal world, OCC 004 is the key piece to get into place to redefine the liquidation of falling members, but we may now be pushing up against the calendar, and RC, GME, and BR may be forced to play their cards rather than wait. Or I could be wrong and everything gets blown open tomorrow. While I do not buy into much of the technical analysis around this stock, there's something very interesting. If you look at the charts and volume leading into the spike at the end of February and where we are now, I think we are getting really close to another big price move. It may or may not be the squeeze, but we see a repeat of almost the exact same price movement and volume as the last time we moved out of a stasis. So right here, guys, you have it, and right here you have it. This is what he's talking about. He's talking about us seeing another breakout to the upside, hopefully. Like a black hole, we cannot actually see it because even light does not escape, but we can observe how the mass bodies around it interact and how it distorts the space that it occupies. The squeeze is there. The best thing we can do is to observe how the major players are positioning and preparing. There you have it, guys. I appreciate you watching this video. If you've taken anything from this video, or if you made it to the end, hit that subscribe button, join the fam, or at least hit that like button. They are both free. Love you guys. Tune in for the next video. Lottery Stocks out.
I like the movies, get one shot, he drop like a hooligan. How we gon' get to this bag when we focus on gunplay, but trapping is all that we got. All of us gon' make it one day like church.